Hello, crypto enthusiasts, and welcome to another episode of Bony's Life. I'm your host, Bony, and today we're diving deep into CoinGecko's Q1 2025 crypto industry report. This isn't just any report, folks. This is the autopsy of one of the most fascinating quarters in crypto history. We saw Bitcoin hit a new all-time high after Trump's inauguration, only to watch the market shed over $633 billion in value by quarter's end. That's like watching the entire GDP of Switzerland disappear in 3 months. But don't worry if you're new to crypto. I'll break everything down in a way that makes sense, whether you're a seasoned trader or just curious about this wild digital frontier. And for my advanced viewers, I promise we'll get into the nitty-gritty data that you crave. By the end of this episode, you'll understand exactly what happened in Q1, why it happened, and most importantly, what's likely to happen in Q2. I've developed an exclusive forecast that you won't want to miss. So grab your favorite beverage, settle in, and let's decode the crypto markets together. Let's start with the big picture. The total crypto market cap declined by a whopping 18.6% in Q1 2025, losing $633.5 billion. That's more than the entire market was worth back in 2020. You can see here that the market peaked just before Trump's inauguration on January 20th, hitting $3.8 trillion. Many investors expected the new administration to usher in a crypto golden age, and initially, that narrative seemed to play out. But then reality set in. The market began a steady decline, ending the quarter at $2.8 trillion. Average daily trading volume also dropped by 27.3% compared to the previous quarter. What's fascinating is that this wasn't a crypto-specific phenomenon. If we overlay the S&P 500, you can see the correlation was incredibly high at 0.85 for Bitcoin and 0.77 for the overall crypto market. Both asset classes trended down as macroeconomic factors, particularly fears about new tariffs, weighed on investor sentiment. But here's where it gets interesting. While the S&P 500 dropped by 4.4%, crypto fell by 18.6%. That's a volatility multiplier of about 4x, which is actually lower than historical norms. Could this be a sign of a maturing market? Something to ponder. Now let's zoom in on the king of crypto, Bitcoin. What a roller coaster this quarter was. Bitcoin reached a new all-time high of $106,182 on January 22nd, just 2 days after Trump's inauguration. That's a number that would have seemed absurd just a few years ago. I remember back in 2021 when people thought $100,000 Bitcoin was a pipe dream. Well, dreams do come true. They just sometimes turn into nightmares shortly after. Because after that peak, Bitcoin entered a steady decline, briefly interrupted by Trump's announcement of the strategic Bitcoin reserve on March 3rd. That gave us a nice bounce, but it wasn't enough to reverse the trend. Bitcoin closed the quarter at $82,514, down 11.8% from the start of the year. But, and this is crucial, it outperformed almost every other cryptocurrency. In fact, Bitcoin's market dominance actually increased by 4.6 percentage points to 59.1%, levels we haven't seen since early 2021. This tells us something important. During uncertain times, investors flee to quality. Bitcoin is increasingly seen as the digital gold safe haven within the crypto ecosystem. It's worth noting that Bitcoin's hash rate continued to climb throughout the quarter, showing that miners remain confident despite price volatility. Network security has never been stronger, which is a fundamentally bullish indicator for the long term. If Bitcoin had a rough quarter, Ethereum had an absolute nightmare. ETH dropped by 45.3% and its market dominance fell to just 7.9%, the lowest since late 2019. That's a staggering underperformance compared to Bitcoin. What's going on with Ethereum? Well, several factors are at play. First, Ethereum's burn rate decreased significantly after the network upgrades, reducing the deflationary pressure that had previously supported prices. Second, competition from alternative layer 1s and layer 2s continues to intensify. Solana, despite dropping 34.1% itself, still managed to have a day where its DEX volume exceeded Ethereum and Base combined. Looking at other major cryptocurrencies, XRP was the only top 5 coin to post a positive return, albeit a tiny 0.5%. But hey, in this market, flat was the new up. DeFi tokens were absolutely hammered, with Uniswap leading the carnage at negative 54.8%. The hyperliquid controversy didn't help, as their decision to delist the Jelly token and settle futures contracts at an arbitrary price raised serious governance concerns across the DeFi space. And meme coins? Well, let's just say the joke wasn't funny this quarter. Trump token led the decline at negative 65.3%, followed closely by Pepe and Bong. Even the launch of Dollar Libra, which was promoted by Argentina's President Javier Milei, couldn't save the sector. Interestingly, established meme coins like Doge and SHIB actually outperformed many serious DeFi tokens. Make of that what you will. Now, not everything was doom and gloom in Q1. Stablecoins actually thrived amid the market downturn, with their total market cap climbing by $24.5 billion to reach an all-time high of $226.1 billion. USDC was the big winner, adding $16.1 billion to its market cap. This continues the trend of USDC gaining ground on market leader USDT, which added a more modest $6.4 billion. Perhaps the most interesting stablecoin story was USDS, formerly known as DAI, which grew by 50.8% and overtook Ethereum's USDE for the number 3 spot. This marks a significant turnaround after a long downtrend since 2022. Now let's talk about what narratives captured investor attention this quarter. AI-related categories dominated with 35.7% of global investor interest, finally overtaking meme coins, which settled for second place with 27.1%. This shift from speculation to utility is a sign of a maturing market. The Made in USA category saw a sharp rise in interest after Trump signed the executive order for his working group to study the establishment of a digital asset stockpile. This narrative captured 9.5% of investor interest and is likely to grow in Q2. What's fascinating is how these narratives translate into actual price performance. Despite the massive interest in AI tokens, most of them saw significant losses in Q1, with the exception of Story Protocol's IP token, which gained an impressive 152%. This disconnect between narrative and price action is something smart investors should pay close attention to. The market doesn't always reward the most popular ideas, at least not immediately. Q1 was packed with significant events that shaped the market. Let me highlight some of the most impactful ones. First, the $1.4 billion Bybit hack in March, the largest in crypto history, sent shockwaves through the industry and raised serious questions about exchange security. Second, Trump's executive order to establish a strategic Bitcoin reserve and digital asset stockpile signaled strong government support for crypto, even if the details remain vague. Third, the SEC dropped its lawsuit appeal against XRP, continuing the trend of regulatory clarity that began in late 2024. Fourth, The Genius stablecoin bill passed through the U.S. Senate Banking Committee with bipartisan support, potentially paving the way for clearer stablecoin regulation. And let's not forget the pardons of Silk Road founder Ross Ulbricht and former BitMEX CEO Arthur Hayes, which symbolically closed some of the earliest chapters in crypto's legal battles. We also saw several major protocol launches: Uniswap v4, Berachain Mainnet, Abstract Chain, and Unichain all went live in Q1. This continued development, despite market conditions, shows the resilience of the crypto ecosystem. And the question is, which of these events will have lasting impact and which will be forgotten by next quarter? My money is on the strategic Bitcoin reserve being the most consequential long-term, but we'll have to wait and see. Now, for the part you've all been waiting for, my exclusive forecast for Q2 2025. After analyzing the data, market trends, and key events, I believe we're set for a recovery in Q2. I project Bitcoin will reach approximately $102,000 by the end of June, representing a 23.6% increase from the Q1 closing price. The total crypto market cap should recover to around $3.5 trillion, a 25% increase from the Q1 close. This recovery won't be a straight line up. We'll likely see continued volatility as the market digests the implications of Trump's crypto policies and the recent Bitcoin halving. But the overall trajectory should be positive. Here are the key drivers I expect to shape Q2. First, Bitcoin dominance will remain elevated at 57 to 60%, slightly below the Q1 peak as some capital rotates back into select altcoins. Second, Ethereum should stabilize and potentially recover to 9 to 10% dominance as Layer 2 adoption accelerates. Third, the AI narrative will remain dominant, but with increased focus on practical applications rather than speculative projects. Fourth, established meme coins like Doge and SHIB will likely outperform newer entrants as the market favors liquidity and longevity. Fifth, DeFi tokens will begin recovering from their significant Q1 losses, with focus shifting to protocols with real yield and sustainable tokenomics. However, several risk factors could impact this forecast. Macroeconomic uncertainty, particularly around tariff implementation, could create market volatility. Despite the pro-crypto administration, specific regulatory actions could still impact certain sectors. Security concerns remain paramount after the Bybit hack, and geopolitical tensions could drive risk-off sentiment across all markets. But overall, I believe the worst is behind us for this cycle, and Q2 will mark the beginning of the next leg up in the crypto markets. So what should you do with this information? Let me offer 3 actionable insights. First, consider rebalancing your portfolio to align with the trends we've identified. Bitcoin remains the cornerstone of any crypto portfolio, but select altcoins in the AI and real-world asset sectors deserve attention. Second, stay informed about regulatory developments. The Genius stablecoin bill and the Strategic Bitcoin Reserve initiative could significantly impact market dynamics in Q2. Third, prioritize security. The Bybit hack reminds us that even major platforms aren't immune to security breaches. Consider hardware wallets for long-term holdings and diversify exchange risk. Remember, this analysis isn't financial advice. It's educational content to help you make more informed decisions. The crypto market remains highly volatile and risky. Never invest more than you can afford to lose, and always do your own research. If you found this analysis valuable, please hit that like button and subscribe to Bony's Life for more in-depth crypto content. Share this video with friends who might benefit from understanding what's happening in the crypto markets. In the description below, you'll find links to the full CoinGecko report and additional resources to deepen your understanding. Join me next week when we'll be exploring the rise of tokenized real-world assets and what they mean for the future of finance. Until then, this is Bony signing off. Stay curious, stay informed, and as always, stay ahead of the curve.